Okay, so we're all on recording now. So if we're ready to go, let's start. Okay. Welcome to Africa Ascending, a podcast series looking at key issues affecting the African business environment and more particularly its impact on the insurance sector in Africa. Hosted by Afro-Asian Insurance Services and Africa Ahead, in this series we will be looking at everything from war to regulations, currency devaluation and climate change. To access this podcast in other ways, we'll be appearing on Africa Ahead, www.afapublishing.com, Spotify, and on the media page of afroasian-insurance.com. My name is Liz Booth, and I'm Editorial Director at Africa Ahead. With me, I have
Uday Patel, CEO of Afro-Asian Insurance Services Limited.
Today's podcast asks, are traditional modelling parameters applicable to current NatCat exposures in Africa? Increasingly, insurers are warning that yesterday's history is no indicator of tomorrow's events. The ability to rely on traditional modelling methods is being called into question. But what next? How can insurers reliably price risks in a more fragmented world where NatCats are proving so difficult to predict? To consider these questions, we have Lesley Ndlovu, CEO of African Risk Capacity and longtime stalwart of the African insurance industry, and Stuart Fraser, technical lead on the Insurance Development Forum Risk Modelling Steering Group. Welcome to you both. So, Lesley, if I can start with you with the first question, is that really true that insurers can no longer rely on the past to predict the future?
Historically, insurers have relied on historical data to make a reasonable assessment on the likelihood of a loss, and when that loss occurs, what the size of the loss would be. And in the climate insurance space, this approach worked reasonably well until we started to see the impact of climate change seeping through the data. In the paradigm that we are in at the current moment, we are seeing a much higher frequency and severity of natural disasters than is predicted by historical models, meaning that if you are relying solely on historical data, then you are underestimating the risk and you are simply not collecting enough premiums to cover any potential claims. This is not to say that historical data is now completely irrelevant, but it cannot be the sole basis on which insurance pricing is determined. Historical data has to be enriched by prospective data, which takes into account climate forecasts, and we have a number of credible institutions that are involved in climate forecasts, including the Intergovernmental Panel on Climate Change. Even when you use historical data, instead of using the traditional approach of relying on the longest time series available, you have to then shorten the time series to the most relevant time series. For example, when you look at rainfall data in Africa, most data sets are about 40 years old, but 40-year data is way too long. And we believe that using 10 to 20 years is a much better predictor of what future losses would be. Also, maybe in something that is specific to Africa, the dominant impact is the impact from the El Nino or La Nina effect, which is known in advance and can be already then factored into how the insurance price is determined. Thanks.
And would you agree with that, Stuart? How do you see it?
Yeah, absolutely. Lesley makes some very good points as the climate's been warming and sea levels have been rising, but also population growing and urban areas expanding rapidly in many large cities in Africa. It's been increasingly difficult to rely solely on past experiences and data describing both the hazard events, but also the impacts of those disasters, to estimate future levels of risk or the impacts of future extreme events. We know that risk is dynamic. It's always changing because of changes in the climate, the natural environment, and the built environment, including development of forested areas or agricultural land into urban areas. And it's our task as risk analysts to update our models to reflect the latest science around meteorology and hydrology, the latest knowledge about societies, environments, and systems, so that we can represent what's on the ground today, but also think about how those changes are maybe manifest in the future. So for insurers pricing or placing next year's contracts for a period of a year, you might say that climate change isn't going to be so significantly different. So the weather won't be so significantly different compared to this year or last year. So what's the problem across this annual timescale? Well, the issue is that we're already experiencing climate extremes, as Lesley mentioned, that would have been unforeseen 40, 60 years ago. And in that warming climate, those extreme events become more frequent. So in some cases, a flood that might have used to have had a 1% chance of happening in any given year might now or soon have a 2% chance, so double the likelihood of occurring in a given year. So while we think about climate change as kind of a long-term process, it's already having an impact on that severity and frequency and makes those extreme events that are really damaging more likely. So yeah, we really need to be capturing, as Lesley said, those El Nino years and these warming trends, and the most recent experience on frequency and severity in our models to give a realistic view and not underestimate the risk by using historical data alone.
Are risks in Africa that hard to foresee? Is Africa a particularly troublesome continent in terms of predictions? Lesley, do you want to answer that one?
So I wouldn't say that it's an Africa-specific phenomenon, because in my view, and at least in the experience that I've had on the parametric insurance side, the biggest problem is not the lack of data per se, right? Because there is a lot of satellite data that is readily available. But the satellite data, the raw data, has to be converted into rainfall estimates, as an example, using an algorithm. In other regions of the world, the predicted rainfall from the algorithm can then be compared to actual readings based on instruments on the ground, and any over or underestimation as a result of that corrected in the algorithm. In Africa, what is unique is that we don't have a lot of on-the-ground weather instruments. So then it's sometimes possible that there's a significant difference that you will see between what the predicted amount is and what the actual amount is. In most instances, this is not a huge problem, because the way insurance policies are designed is to pay for extreme variations, so extreme droughts, as opposed to moderate droughts. So this will still get captured, even though there is variation in the data. Thanks.
Stuart, what do you see those as the solutions?
Yeah, I think there's no single solution, but several solutions that I think are useful in Africa, but are not unique to Africa. So collecting better data on disaster events is important. As Lesley says, we've got in some areas quite sparse observation networks, so we don't have a lot of river gauge measurements, for example, recording extreme flood levels. we don't have a lot of rainfall gauges or wind gauges recording the wind speed or the level of rainfall, especially in extreme events. So we can't use that data to build quality models or validate those models. So we have to refer to regional rainfall reanalysis or global data in models. So that's one challenge, and a solution really is to expand those observation networks, and that can be quite expensive, but there are various efforts to develop out those networks at low cost. And national hydrological and meteorological agencies are working towards developing those networks to increase those observations, but they need more funding and resources to do that rapidly. And the other part of the data collection is on disaster impacts. We need to relate the hazard parameters and the extent and the flood, the extent and the distribution of hazard impacts to the impacts on people. So we lack information on the level of damage that has been caused in events in a lot of areas of the world, but particularly in Africa. We lack detail on how buildings have been damaged according to different wind speeds and different flood depths, or how crops have been impacted by certain levels of water deficit. So understanding that vulnerability, that relationship between the hazard and the level of damage is really important for improving the assessment and the understanding of risk, and that feeds through to the design of parametric triggers or other risk transfer products. Another solution is applying these models with a forward-looking or climate condition view of risk, which allows us to estimate losses under one or more projections of future climate and also projections of urban environment, where our focus is on populations and the built environment. Modelers have been trying to address this by selecting subsets of warmer years or El Niño years to represent those extremes. Others are now including longer term climate condition data, which gives us the ability to exchange a historical view of risk for one which uses an estimation of what cyclone frequency, severity, or flood frequency might look like, say, in 30 years' time under different emission scenarios and warming scenarios from people like the IPCC. So we can adjust the hazard component of our risk models to look at how those future risks might change under those different scenarios. And as I mentioned, another challenge is or another solution is to try to represent the change in population and urban environment. And we have urban growth models coupled with population projections from national governments that can be applied in analyses to help with this. So yeah, a few different solutions there that come together, I think, to improve the view of risk.
Liz and Stuart, if I can come in here, and I apologize in advance because I'm a total novice in this subject. But from where I sit, as I understand, modeling is a predictive tool which assigns probabilities to exposures, so you can quantify, cost of an event occurring. Now, we know that traditionally modelers have been looking in the past, but now you say that they're looking ahead, looking at different scenarios. But the events that tend to throw the planning of insurers and reinsurers is where you have totally unforeseen events occurring, like, for example, the sudden rains in Dubai, which caused the floods. Who expected there to be downpours of that nature in Dubai? So that comes with a huge cost. Now, in this day and age of AI, if I may just explore that, are modelers looking at using the current AI technology in creating more predictive, forward-looking tools? Because currently, as my understanding of AI is that it looks at publicly available information and comes up with quite often wrong conclusions. So is there anything in the pipeline that modelers are working with where they can use this technology to probably look at, have several scenarios and let the AI tool work out something that is forward-looking and predictive?
Yeah, so AI, machine learning, particularly within the realm of AI, is being used within models, and um, it's been used to look at, for example, wildfire potential. It's been used to look at landslide potential in greater detail, um, and it's being used to identify patterns in the climate to understand the potential for extremes that we haven't observed before, or haven't been recorded in our lifetime, or within historical records or the period of instrumental measurement of climate. So it is a tool that's uh, being included within models increasingly. But we can also use more traditional non-machine learning methods to look at those extremes. We can perform sensitivity testing within the event sets that we have that haven't been developed through machine learning. So we can stress test portfolios or national building stocks of data by increasing the intensity of individual events or adjusting what a particular extreme event looks like to really stress test what would that be like if it was 20% more intense. So that is done. And the Lloyd's market employs realistic disaster scenarios for Japanese typhoon, US earthquake, US hurricane, European windstorm, etc. And that's maybe something that we can start to develop in Africa, start to look at some stress testing scenarios that would really have a big effect if they were to occur on various economies or cities. So yeah, AI machine learning is being used increasingly, particularly within the development of different components of risk models. But we can look at those unforeseen extremes, given if we're given that task and have the models to adjust according to different levels of unexpected events.
The one
Yeah,
thing,
thanks. And just maybe to jump in there and build on what Stuart's been saying. I think his comments are really spot on, because then AI gives us the power to be able to contemplate even more scenarios, more extreme scenarios, just to understand a little bit more in depth what the impact of particular events would be. And these are events that would have been unthinkable some years ago, but just given where we are with climate change, then they have to be within the realm of contemplation.
final question. We've had the recent cancellation of the extreme weather database by the Trump administration in the US. So does that signal that Africa needs to do its own bespoke database? And then if that is the case, who should be driving it? Where does the responsibility lie for this sort of thing?
Shall I begin?
Yeah, Stuart, if you want to kick off.
Yeah, so referring to what we spoke about earlier, having event observations recorded and catalogued can help understand the risk today and help us build better models, and project risk into the future. So look at those unexpected events that could occur are plausible under a future climate. So there is a gap in data being opened up by not continuing to collect that sort of data, and it will hinder risk understanding and management. I can't say who in Africa should drive a project to continue developing that, but I think it is a good idea for weather observations being collected by national meteorological and hydrological services of individual countries to be collated into a regional database, because a lot of the risk modeling we do in Africa is on a regional basis. We're not producing models that adhere to country borders strictly. We're doing regional models and maybe looking at the risk for a country or disaggregate. Sorry. We're looking at regional modeling and then looking at the risks to a particular country. But we need data that is at the regional scale to inform risk modeling in a more holistic way. I would add to that, though, the collection of data on the impacts of disasters should be incorporated into that database, and that's data that can be collected by national disaster management offices and also NGOs on the ground who are looking at the loss and damage from disasters and also displacement of population. The WMO have also stated that investments in those meteorological and hydrological services are needed to enhance data collection and improve forecasting capabilities. So it's not just an insurance-focused issue, and it was not just insurance that would benefit from collating that data in Africa in an African database. It would be early warning systems, it would be weather forecasting as well. So lots of different benefits. Some of this is being collected already and reported to the UN under the Sendai framework. So member states are reporting progress against the Sendai framework targets, which include indicators on number of deaths, amount of agricultural loss, economic loss or damaged critical infrastructure due to disasters. So some of that data is already being reported, but if that can be developed into a more detailed regional database, then it would be very valuable. And insurers have a role to play in that, in collecting and contributing claims data, I think, into that kind of database. I think overall, though, it speaks to that larger issue of more autonomous risk understanding of country governments. So if governments are collecting this data and sharing that with neighboring governments and within the region, they can understand how the risk is changing within the region. They can continue to maintain their own view of risk more independently of having international consultants or research organizations from Europe and the US come and develop their risk analytics. So I think it contributes to a greater environment of more autonomous risk understanding and risk management as well. And that's what we try to push for in the Insurance Development Forum through open risk modeling and capacity building within risk analytics through the Global Risk Modeling Alliance, where we try to co-develop risk priorities, co-develop modeling and data solutions, and really build that sustainable capacity to continue to do exposure assessment from different hazards, continue to do risk analytics, and keep that view of risk updated as populations and urban development changes and climate changes. So yeah, I think there should be a regional solution, but it has very broad benefits in the whole risk understanding ecosystem and the whole risk management, risk reduction ecosystem, I think.
Thank you. Lesley, do you have any final words on that before we wrap up?
Yes, just to say that I completely agree, right, that it has to be firstly at the national level, where you've got national disaster management agencies getting to grips with this data, because it should inform their budgeting and their planning. And there is also an initiative at the level of the African Union which was announced a couple of years ago at the COP, which looks at then precisely how the data from each of the countries can be aggregated to have one holistic view for the entire African continent.
Thank you very much to both of you. Uday, I think I must hand over to you to sign us off. Thank you.
Thank you very much, Liz. And thank you, Lesley and Stuart, for your immense insight into this very technical subject. And I also want to thank our wider listening audience for joining us on this podcast of Africa Ascending, where we are not afraid of asking the difficult question in finding a possible solution. Thank you very much all for joining us.